All right, folks, now, despite sky-high valuations, my next guest was recently short Palantir, and then he's covered since then. I want to bring in now Clough Capital CEO, portfolio manager, Vince Lorusso. Vince, welcome to the show.
Nice to be here.
So it's interesting because this is Palantir, forward PE ratio 188. Forward price to sales ratio 116. A lot of people say that's a hell of a look, and that's a short right there because it's extremely overvalued, and yet you covered your short.
We did, Charles. So as an active manager, we have a lot of turnover in the portfolio when we think that opportunities present themselves long or short. So we manage 2 active ETFs at Clough Capital. Palantir, I think, is an interesting position from the longer-term perspective. If you look at the opportunity for AI and the ability to penetrate government and the software-type margins and the scalability, it's a really impressive business. Obviously, anybody would be impressed with what Alex Karp has created. I do think as an active manager, you look at tactical opportunities in the market to protect capital, and you try to identify companies that if there is a correction, if we get some volatility, which companies are asymmetrically exposed to the downside. And that enables us as active managers to put a position on like a Palantir short, where we're not going to stay there very long. As you mentioned, we've covered that position. But I think it's a good way to insulate risk and lower some of the volatility in the portfolio to have a position like that.
Let's talk about the Clough Hedged Equity ETF. CBLS is the symbol. And it's an intriguing ETF in the sense that you've got NVIDIA as the biggest holding and Redfin. Apple up nicely today when people are talking about getting out of this. So what drives the names here? What drives the selection process?
Yeah, so it's a great question, Charles. It's primarily the fundamental research. I would say at Clough Capital, we start with a macro view, right? Where are we in terms of profit cycles, credit cycles? What are the opportunities we see as investors? We are bullish, and for reasons we can talk about, technological innovation being one, demographics. We think the Fed's becoming more accommodative. So we start out, despite the fact that this is a hedged equity strategy, it has a long book and a short book, we're starting out with the view that we want to be more long, right? We think about parameters, typically 30 to 70% net exposure. We've been skewing to the higher end of that because we are bullish. And then we look for themes. And AI obviously is one of those compelling themes. So when you look at our portfolio, and we post all of our holdings on cloughetfs.com, you can see the full list of longs and shorts. They tend to reside in a few big themes that we see that are multi-year in duration. So when you go through the holdings, you know, such as some of the names you've mentioned.
Now, this is your Select Equity ETF, which is a little different. Long only, not hedged, long only. Again, Reddit ranks high up there. TJX, which is intriguing to me. So are you saying that the consumer's okay?
Well, we think there are 2 different economies. Not to belabor the point, this K-shaped economy. We think that's reflected in our portfolio. So obviously the AI theme, you think about a Reddit, for example, and they have a lot of users. It's one of the most searched terms on Google. So they're monetizing better through AI. They're acquiring more subscribers. There's an AI tailwind there for Reddit. TJX is a more defensive company. There's a value basis. They've been great operators, and we like the ballast there in the portfolio.
I'm seeing names like, Clear, Invent, of course, Quanta on the data center build out. So again, I'm seeing all of these interesting, things that are in my mind bubbling up. Like there's an economic reason for owning these as well.
Well, and I think it's the derivatives of the AI play, right? So you have NVIDIA being kind of the first name that everyone got familiar with because they're building the computational capacity through the semiconductor chip, and then we're looking at the data center and how do you build the data centers? How do you fuel the data centers? And some of the names we own in the portfolio will benefit from that CapEx spend.
I can't let you go without asking about the hedged equity ETF the short holdings, because I'm seeing a lot of names in here because I've been antsy about the private capital, private equity. So I'm seeing Apollo, I see Blackstone, I see some financial companies in here. How concerned are you, I should ask, about what's happening with private equity right now?
Yeah, I think there are reasons to be concerned. I think at a portfolio level, a lot of these companies are very healthy. They've been growing. They've been raising assets. But I think as some of the issues start to emerge,
their stocks are breaking down big time now.
They are breaking down a little bit now from pretty lofty valuations and on the heels of a lot of asset growth. So again, when we think about building the portfolio, it's where can we get an asymmetric risk reward, asymmetric to the upside in terms of the long book, and asymmetric to the downside in terms of our short book. And some of these private credit type names are starting to emerge through that lens.
Yeah. Vince, good stuff.
My pleasure.
Thank you very much.
Thank you.